Stocks are off to a good start this morning, and Nvidia is playing a pretty big role in supporting the market after bouncing on Friday and continuing it this morning ahead of the Consumer Electronics Show, at which Jensen Huang, Nvidia CEO, will be speaking tonight. Tom White's with me here in studio looking at the options market for Nvidia. Ivana Delevska joins us, founder and CIO of Spear Invest, a noted semiconductor bull. Happy New Year. Good to see you, Ivana.
Happy New Year, Oliver.
Nvidia, Jensen Huang, CES, take me through it. What are you expecting?
Well, Oliver, as you know, the stock stalled a little bit going into the end of the year last year, and people were very concerned about two things mainly. One is competition from custom chips, and the other one is execution on Blackwell deliveries. So we are expecting to hear more details on both. On the competition from custom chips, I think people miss two key points, which is that CUDA is a real advantage for them. So we think they're going to be talking a lot about that and introducing new frameworks and models that people can use to build applications. And on the Blackwell side, we think that Blackwell is really on track. We think the concerns were overblown going into last year. So any sort of indication that that's going well will be a positive catalyst for the stock.
So do you expect any updated numbers, or is this mostly product and sort of innovation talk given the setting?
These types of events are mostly product and innovation talk rather than numbers, but you can easily imply if things are on track, then their guidance all of a sudden becomes achievable, and people have some concerns about them being able to deliver billions of dollars of Blackwell. So any sort of commentary that would indicate that the numbers are still on track would be positive.
What is the kind of next step for product? Just to come back to that point, to your point on Blackwell, that seemingly is now sort of an assessment of how many buyers show up and how ready the machines are to be bought, kind of a supply and kind of demand basic, because we kind of know the product. What might surprise in terms of either the applications that they're offering, the software, or just generally kind of from the consumer standpoint, what are people going to be buzzing about?
Well, I think the one thing that people kind of don't appreciate here is how model training is changing over time. And everybody is asking where is the next demand leg going to come from? And this is really where we see a lot of it coming from. Models are going to be trained in a very different way that they are trained today. It's going to be more of an iterative process that will require significantly more compute. So I think any detail on that, basically driving exponential growth for accelerated computing, will be very valuable to get from this conference. So in the past, we used to train models and then do inference. In the future, we're going to be doing more of a continuous process of constantly training and improving the models.
Well, when he's called the demand insane for Blackwell, I guess that sets the bar pretty high, but stock moving close to the record like it believes that it will be justifiably insane. Thinking about the price action, Ivana, kind of what is your baseline on that right now? Where do you think Nvidia could get to this year, and what kind of path do you think it takes?
Well, we are expecting pretty significant upside to the numbers. So we think they're going to be able to deliver $200 billion just from Blackwell alone. And if you do the math on that, even if you assume constant multiple, and if you assume that they can continue to grow, you can see this stock compounding at a 30+% rate over the next several years. So we still see pretty solid upside. At some point, the upside is not going to be as exponential, but it will be more of a compounding type upside, and that's what we expect for this year.
Okay. The Taiwan Semi and Hon Hai news, good overnight for the narrative?
Can you repeat that, Oliver? I couldn't hear very well.
Taiwan Semi this morning rip-in. Looked like Hon Hai was pretty active, so I guess Nvidia's partners are jamming. That's a good sign, right?
That's right. That's a very good sign. So I think it's a very good sign for the space overall.
Okay. Tom, let's talk some options. Hang with this, Ivana, for a moment. When you look at the options in NVIDIA, how wild is it? I mean, this is not an earnings report, but when Jensen takes stage at a big event, I would imagine implied vols are creeping up, Tom?
Not creeping up just slightly.
Yeah?
They're still relatively low. The Ivy percentile rank still around that 25% level, so in the bottom 1/4 of implied volatility levels that we've seen over the last 52 weeks. Now, last year, CES was on January 8th. Stock rallied 6% after that first keynote that he gave. So expectations pretty high. Option flows on upside calls, out of the money calls are expanding as we talk. The put call ratio really low at this point because everybody's piling into speculative calls to the upside here. So I looked at it from the perspective, if you think it's going to go up, maybe you take that bullish stance, you buy some calls, but maybe offset some of the costs on it because the stock has rallied pretty significantly over the last few sessions. So going out to the January 31st weekly cycle, this 25 days to expiration, I'm going to buy the 148 strike call. That's slightly in the money. It's got that higher delta. And then against it, because maybe it gets back to all-time highs, maybe it continues to move up. I sold the 160 call against it to offset some of the risk and cost on the bullish call purchase on the 148 strike. $12 wide bullish call vertical, paying roughly about a $4.50 debit for it. That's going to be your risk, $450, and that spread can expand to $12 if it gets above 160. And you have some flexibility as far as trade management goes on this one because you're buying a directional bullish vertical, right? So if the stock pops to 155 tomorrow, 156, this thing expands maybe to $7-8. That gives you the opportunity to maybe parse some of your position if you're buying multiple spreads on this one, or just close it all. You don't have to wait until expiration to exit this trade if you get the move you want sooner than expiration.
I mean, it's going to do really well if we get past the high.
Yeah.
You know, obviously your gains will get capped out, but that's kind of a logical approach, I think, given the chop that this has been in. Until it breaks out, it might well be range bound. So it'd be a pretty harsh rejection though if it gets up here to 150 and then turns around.
Yeah, it would. That all-time high about 152.
That's why I like the directional
Yeah, you
trade.
only need a 2% move from current share prices to get above the break even here, about 152.5.
Right. Ivana, when it comes to the other stuff, is there room in 2025 for the second-rate chip trades to take a stand, or have we learned that the numbers are just too powerful for NVIDIA to allow second-rate players? I mean, AMD was pretty rough in the second half of last year. Bunch of chip makers' charts look totally different.
Well, Oliver, it's going to be interesting to see. The downside actually for AMD last year came more from the custom chip makers. So I think there is room for several players here. However, it's very difficult to compete with NVIDIA, and really the custom chip makers have made slightly more progress than AMD last year. So we're watching this very closely because the Microsofts, the Amazons of the world, they're partnering with companies like NVIDIA, like Marvell and Broadcom to develop their own chips. So AMD is having a bit of a rougher go, but I do think the market is pretty large and there is going to be a space for multiple players. It's just going to take a little longer for somebody like AMD to gain traction.
Okay. Thanks a lot, Ivana. Great to get your take as always. Thanks for being here. Looking forward to continuing the conversation throughout 2025. Ivana Delevska, Spear Invest, SPRX. Tom, what do the AMD options look like?
Implied volatility, the stock's rebounded a little bit. Remember, it was down 18% last year, but it's rebounded a little bit over the last few sessions, along with NVIDIA and the tech trade in general. So I looked at a bullish trade in here if you think it's going to rebound even further, but I'm offsetting some of the costs. So instead of buying just a straight call or a straight call vertical like I did in the NVIDIA example, I'm buying an unbalanced call butterfly to the upside where I can offset some of my costs, where my risk is only what I pay on it, and it's lower just because I'm doing the butterfly. So going out to the January 31st weekly cycle, so 25 days to expiration, 3.5 weeks, you're going to capture earnings on this one. The earnings are the 28th, so you have to keep that in mind. There's some event risk there. But buying one of the 130 strike calls, slightly out of the money to the upside, sell two of the 140 strike calls, and then buy one of the 145 strike calls. So in essence, the strategy is you're buying a call vertical, the 130, 140 call vertical, that's bullish, and then offsetting some of the cost by selling the 140, 145. You've got two short options at that 140 strike. That's where you want it to go. But you can see here the apex of profitability at or near that 140 strike. If you pay a $2.40 debit for it, that's going to be your risk with the break even, 132.40 to the upside. That's only about 2% above the current share price. You don't need a monster move. And even above 145, it's going to be more than a double in profitability on this one. But you do kind of want it to grind higher towards that 140 strike over the next 3.5 weeks.
Okay. Kind of more of a slow grind than the other trade for Nvidia, which capitalized on a pretty quick pop.
Right.
Okay. Fair enough. AMD joining in this morning, 3.5%. Thanks again to Ivana Delevska from Spear Invest. Thanks, Tom White, for the look at the trades there and the options.